I just wanted to touch on the topic that I was going to touch on earlier, if we don't mind.
Yeah, let's do that, and then I'll wrap shortly after. So go for it. To your point.
Yeah, so David and me were kind of talking about emerging markets a couple of days ago, and essentially I was saying that looking forward, I think that if you're bullish the China reopening play, you also have to be bullish Vietnam, because there's something in economics called the Heckscher-Ohlin theorem, which says that a nation that's capital rich, let's say the United States, will there's like an arbitrage that exists, so it will essentially, like Adam Smith's talked about, engage in comparative advantage, but it will export capital and import labor. So China kind of was a net beneficiary of this theory. The problem is, now that labor differentials in China, that arbitrage is gone. Labor has increased at a rapid rate, so therefore China started to import labor, or sorry, let's say outsource to Vietnam. And so when we are talking about emerging markets, Vietnam's one to keep in mind. Vietnam was actually up 4% on the day. Actually, most of the emerging markets did decent. Even I think Egypt was up about 3%. And so this is kind of where, like me and David were having a conversation on the phone earlier, where I think that people need to maybe start looking. I think that Indonesia is attractive as well. Malaysia is attractive as well. Israel, but I wouldn't consider that an emerging market. And so I think that these are places that people need to watch. And looking forward, we are starting to see some easing of liquidity conditions, in the sense that the cross currency basis swap, the mother of all indicators, the one and only indicator. I think it was actually written on the tablet of indicators as the first. Is actually tightening again. So that's saying essentially that this dollar liquidity crunch is softening, and therefore we're starting to see changes in the euro dollar market, where the euro dollar futures curve is actually starting to tighten as well. So I might be wrong about my pivot. Again, with the pivot, I only have a euro dollar futures position on. So, I mean, it's not the overall of my portfolio, but what we are seeing is, if that tightening of like, let's say, conditions continues, and there's no longer the shortage of dollars, the Fed might be able to pull off the higher for longer. The only question then is credit spreads within the United States, and how does that all factor down through refinancing spreads now being higher. But nevertheless, um, yeah, I think that emerging markets are interesting. And also, even if you look at the macroeconomic picture, um, they were way ahead, emerging markets, on the tightening policy, because they have to be. They can't run monetary policy like we do in the United States, or Europe or Canada. Um, so actually, if you looked at a lot of these commodity nations, when inflation started to run high, they started tightening credit conditions. This raised the cost of capital. It affected terms of trade. It devalued their currency, which then devalued their exports relative to imports. And therefore, they kind of got hit on the face. But now that they've actually already kind of gotten through the pain stage, you could say, broadly speaking, if you look at Brazil and some other nations in Latin America, examples that are top of mind, I think the fact that those things are starting to ease, um, again, is a kind of a time to maybe give those a look. And I will say this, because I know people are like, well, how do I invest in emerging markets? I agree with I forget her name, the head of the Freedom ETF, where you should start looking at individual freedoms. How much do countries respect property rights? Malaysia and Indonesia are very good countries in that aspect. Egypt's a little more of a different story, but the central bank of Egypt and the government of Egypt actually released a paper over the weekend, Sunday actually, because Muslim country, so Sunday they open, Friday, and anyways. But so they were on Sunday. They released a paper saying that they're actually going to go through reforms in terms of property rights. I mean, again, it's Egypt, so take that with a grain of salt. But I do think that gave some relief to the market. So I mean, those are things to definitely watch. And obviously, you always have to again, like the I can't remember her name, and I spoke with her a couple of days, like a week ago. But those are kind of the places that you really need to be watching. Is the places that don't have a lot of autocracy risk, that don't have an issue with personal property rights, and I think that at least within a relative allocation, let's say 15-20%, I do think is probably a good place to start to look at least going into 2023.
Awesome stuff.